Right. Thank you very much, everybody, for joining today. Okay. Today, we're really going to understand the fundamentals of this business. Okay. A lot of you guys are not still understanding this. Without the fundamentals, you're not going to be able to take your trades properly. So first of all, the way we do this is we've got to understand two things. One is the US 10Y, which is the government bonds for 10-year. And the next one is the dollar index. Okay, those two, first of all, every single day must be checked. If those two are not checked every day, you're not going to get your analysis right. So first of all, if you look at this particular chart on the US 10Y, bullish continuation. Okay, that means the purchasing power of the dollar is very, very strong. Now we see what happens with the dollar index. So the dollar index is also going up. So this is telling you that the overall dollar index is strong. So how do we interpret this? So if the dollar index is moving up, the analysis is that every single other pair or currency or stock should go down. Okay, so again, US 10Y going up, dollar index going up. Now let's see what happened on Bank Nifty today. Okay, Bank Nifty, as you saw from the guys who did take these trades, okay, Bank Nifty is starting to go down. Okay, and look at the price points that it rejected from. The 36,750, and it also got rejected from the 36,850. So this is telling you that the overall trend is starting to reverse. If we now look at this from a line chart, it's starting to reverse quite aggressively as well. Okay, so no longer as it was in the previous day going up, now it's starting to go down. Okay, so let's go back and now let's look at the Nifty. So the Nifty itself, as you can see here, okay, same as the dollar, as the Bank Nifty, okay, was a couple of days ago, okay, in bullish area. Now it's going into bearish area, okay. It dropped from the 17,450. It also dropped from the 17,400. If we now look at this from the line chart, okay, the line is no longer going up. It's starting to go further down. Okay, so this is telling you the true correlation of understanding this. If we now look at what happened with the Euro USD today, okay, so the Euro USD, like other pairs, okay, should be going down. Okay, so as you can see, it was in a particular zone from the supply. It's starting to go further down, okay, into the demand zone. But yesterday and the day before, okay, it was trying to get some from the bullish momentum, but it did not go further up. Okay, this is telling you that the overall dollar is strong and the euro and everything else should be weak. So now let's look at from the Great British Pound and the US dollar. Yesterday, I mentioned that this particular candle should be going from an area of demand going to the area of supply. But however, what happened was that the demand did not go into more bullish momentum. So the bears took control. So this is what we call a demand flip. So demand turns into supply. So if we now look at from a line chart, okay, it has aggressively moved down. Okay, so even though we saw on the candlesticks a very big strong movement from the bulls, it did not continue. That is why we entered a selling area where all the sellers are based. A big moment, now it confirmed into a big selling moment. So if we now look from the monthly point of view, especially the bottom indicator, okay, the bottom indicator is all about volume. Okay, it's a volume indicator. So the way I got this is I went onto the indicators and I just typed in volume, the very first one, okay? And this is telling you what the red is rising and the blue is falling, okay? So the falling one is gaining. So this is telling you that the overall strength of the bears is continuing, okay? On the weekly chart, okay, if we look carefully, it did not go above a particular the supply zone, okay? So that's why it will start to go further down. If we now look from the daily point of view, okay, the day, 1 day's action before on price action, it was in good, strong, bullish, okay, continuation. However, it did not make higher highs. So then the bears took over and now is dragging the price to the demand zone. So zone to zone trading, if the right zone isn't flipped, the continuation there. So this is telling you overall supply is more than the demand. So that means that the sellers have been just waiting there for the right moment to basically enter the market and trap these guys out. So whoever went long, okay, I took this out and I took my profits quite a while ago, okay, because the flip was there. So I said, right, let's get out of it straight away. But you've got to understand the correlation of why the government bonds and the dollar index makes their play. If dollar index is strong, it is meaning that the treasury bonds, okay, is in good, strong momentum, okay, in bullish territory, dollar index, bullish territory, all the other ones are going to fall, okay, bearish, 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 okay? This is the only way you're going to understand this, okay? And if you don't understand this by now, okay, it's not going to do you any favors, okay? These are the two main components of trading, okay? If you don't understand those two, it's going to be very, very hard for overall trading to continue, okay? We do not need to look at supply and demand with, as long as we understand the treasury bonds and the dollar index. Those have to be understood first. The reason why we mark the supply and demand zones is so that we can understand where the most sellers are and where the most buyers are, okay? In the Nifty, okay, strong momentum from yesterday, continuation, hits a particular zone, boom, starts to go further down, okay? Euro USD, yesterday and the day before, it has been slowly declining, okay? Overall, it has a supply demand, okay? GBP USD from yesterday, it was strong in bullish power. However, if you look carefully at what happened in this particular area, okay, that continuation, okay, so at that time, okay, the bulls were in control, but no longer, because the power was coming from the supply end. The supply end was more controlling because we had more selling pressure from here. This is the reason, okay, why supply and demand must be understood, okay? As soon as you go from a demand area where the buyers are, so remember always the rule, you buy at the demand and you sell at supply. So when they say buy from the bottom and sell at the top, this is what it's referring to. You don't buy here and you don't sell here, okay? Buy at the bottom, sell at the top. It was going in that direction, okay? It was going to be stopped out. Instead of being stopped out of the major zone, okay, it stopped out earlier, okay? We could see that it didn't really have much choice in terms of what it did because of where it was at. So if I just take, let's see, yeah. So if I look at our price label, so here, I'm going to take another price label of where it's supposed to get out at. Okay, we really weren't that far off in terms of the selling pressure. So even at the very bottom of it, where price took us out in this particular candle as the top was the 32,913. Okay, where price was supposed to go at was the 33,327. Okay, there wasn't very much in difference. Okay, so the suppliers, instead of going from the sellers, basically took action at a very early stage and just took the buyers out because that's where the pressure was going. But overall, from the monthly side, what you need to understand is this particular indicator. Okay, indicators I'm not really keen on, but you've got to understand how volume must be there. If the volume is increasing, okay, so if I look at my parameters here again, okay, blue is falling and red is growing. Okay, so the overall strength of the falling is increasing on the monthly. So this is telling you why this is falling on the daily, okay? Why it's falling on the weekly, okay? If you guys still don't understand this, okay, you must understand this from a very, very small time frame, which is doing it from daily point of view is the way that most institutions are going to be involved, okay? If the institutions are involved, okay, you basically got no chance in basically doing this. Okay, does this make sense to you guys? Good, right? So make sure you understand the two main components, which is the US 10Y and also the dollar index, and then you'll see how this goes further. Good, right? So that'll be it for today. Okay, please make sure that you understand how this works, and then you see your overall trades get better. Right? Thank you very much, everybody, today.